In this video, we will cover how to trade markets using price action rules that will help us identify where the market is going and where are the high probability setups. So in front of us on the chart, we can see we started with bullish spike. Market is going sideways and EMA flattened. So we are entering a possible consolidation. So as a price action trader, when I understand that we may have a consolidation on our hands, what I have to do? Well, I have to identify the extremes of the consolidation. So this is the support, the bottom. These are the highs. So I'm going to project possible resistance. And in the meantime, while I'm navigating consolidation, I need to follow the short-term trend line rule because there's a reason to price movement and I want to understand when the market may pivot. So downtrend played out with the break in extreme. Prices are back above the EMA, and as long as this uptrend is in play, this tight one, I cannot be thinking about selling. Okay, this is why we follow the trend line rule. We're closing below the EMA. We still expect new high to be tested, so we're not selling just yet. We have a new high first entry long, second entry long, but problem is it is closing too far up right into these highs, and there is not much room to scalp before reaching the new high. So we can't really go long just yet. We wanted to go long a little bit lower so we have room to scalp out. So let's just be patient. A new high was created. Okay, this high is higher than the latest highest high inside this channel, and even by one tick we broke this high right here. So all uptrends played out. So what I have to do is I have to mark my new extreme on the chart because all uptrends played out, and now we have micro double top. Now more advanced trader can consider this as a lower high confirmation setup. It take higher, reverse down, and because all uptrends played out, and according to range rules, what you want to do, you want to buy low, sell high. So more advanced trader can consider selling lower high because all uptrends played out and you're at the top of the trend range. If you're a more developing trader, you want to wait for the push below EMA and get a reversal pattern. So once again, I'm going to redraw the short-term downtrend working lower, something like this. Market is correcting, and notice what we have next. Now, technically, this is new high, first entry long, pullback, second entry long failure, and because we pushed below EMA and this downtrend needs to get new extreme and we're coming off the range highs, the target is the range bottom. This is a failed second entry long. Now, technically, this is micro double bottom, so we need to reset the count, but you can see the visual aspect of two leg get pullback. First leg up, break, second leg up. So even though there is a micro double bottom, because it is also a failed second entry long and EMA keeps rejecting every single time, you can consider more advanced trader once again because you can clearly see those two legs, rejection of the EMA. It is a failed second entry long, two high probability setups in one. It's always stronger than to have just one setup. And downtrend needs to get new extreme, great high probability setup. We created a break and a new extreme. So right now I need to pause looking to sell. Now this is possible fail breakout because most breakouts out of trend ranges will fail. However, this was quite bearish. You can see the pullback is not as broad and sideways. EMA get rejecting, so it feels a bit too early to be buying just yet. Can we get some confirmation setup? We have a high low here, but it's an inside bar. I can't really take it, and by the time I get a failed second entry short, as you can see, it is quite stacked, but you're not thinking about selling because downtrend played out with the break and the new extreme. You can also see one leg down, break, second leg down, something like this. I can move a little bit higher. I want to see the push above EMA in reversal pattern. Okay, there was no good opportunity for us to go long. At first, I'm going to draw tight channel like this, break, move to new extreme, but because we keep going higher, I'm going to widen the channel. Okay, I'm going to take my channel and I'm going to make it wider. Why? Well, number one, we're coming after failed breakout at the bottom, which means it can generate stronger pullback in the opposite direction. Number two, we're playing the range rules, buy low, sell high. So our next target from the bottom is to reach the resistance right here. And there was only a first entry long, not even touching the EMA. So we expect stronger push. I'm going to widen the uptrend like this. So right now what we're thinking about, second entry long at the EMA. Okay, so we're following the price action. I'm not thinking about selling just yet. This option is in play. I cannot take a first entry long. We have a new high, first entry long, pullback, second entry long. So now we have second entry long, but as you can see, we first broke below the EMA. So I definitely cannot go long above bearish bar. I would have to consider double bar entry. Problem is, what if the downtrend is slightly wider like this? Now I like to think about this as there is already break in extreme because the main bias is bullish. And because we broke below EMA first, I'm going to be patient. I'm going to wait if we're going to get what? Confirmation setup that would clear my doubts about this particular market structure. So we broke higher, and now we have a high-low confirmation setup, and look at these sellers got trapped selling the failed second entry long, while this uptrend, according to trendline rules, needs to get new high. Great tier 1 signal bar, you take one tick lower, reverse back up. This is a great textbook high probability setup, great tier 1 signal bar. It's confirming the fact that there's a break in your extreme, and what a great setup. You're expecting new high. We have a break and a new extreme form, so I'm gonna mark my new high. Let's see what's gonna happen. Now we expect correction, but notice what is happening, and this is very interesting. EMA keeps holding once, twice after breaking new high, and notice how big the second entry long is. And this is way more nuanced way how to read the price action, but with more experience you will understand what can happen here, because since we came after failed breakout, which can generate stronger pullback, and EMA keeps rejecting every single time, there is a case to be made for slightly wider uptrend, something like this, and you can see it still holds fairly well. But because you need to be way more experienced, I definitely recommend for beginner trader to be waiting. But if you're more advanced, you understand what's happening here, because notice how big the second entry long is, which means there's a strong rejection of the EMA, and it's unlikely for there to be a failed second entry long. The bigger it is, the less likely the market is going to reverse on a failed second entry long, and our target is still the resistance. But if you waited, that's okay. You have a technical break in your high. Let's follow the rules, only if you're more advanced. And market keeps working hard. You can see how bullish this looks. I'm not thinking about fading, because why after breaking new high, we keep working higher and EMA keeps holding. It in fact confirms the fact that there is possible wider trend line. So I was looking for some alternative, and I like playing this spike and a channel, because as a price action trader, when I'm looking for these channels, I want to have a lot of confirmations, and you can see this spike and a channel fits fairly well. EMA keeps rejecting every single time. It's not really acting as a rangy market at this point. It is consistently getting rejected at the EMA. We keep working higher, so the structure evolved into wider pattern, and I am still thinking bullish. So because I'm thinking bullish, what's going through my mind? Number one, I cannot pick a top. It's against the trend. Number two, I cannot just buy willy-nilly randomly far from the key entry point, because the push phase can turn back any minute. I want to buy, notice, at the bottom where the correction phase will end and a brand new push phase will begin. Okay, so I'm just waiting, and now we have correction happening in the market. Good. So we're expecting to get a two-leg gap pullback. This is the first entry long, and now we have another second entry long. Okay, now this second entry long is closing quite far up, so it was super tempting. I skipped it because I wanted the bar to be slightly smaller, but this is a good, decent setup. It is a big bullish bar. Why the channel is getting confirmed? Because EMA is holding. We're going to go higher. I definitely recommend using deep limit order though, because you want to make sure you have some room before reaching at least the trend channel line. Now we have possible overshoot, so I'm going to respect the market. I'm going to expect stronger correction, and notice what is happening. Another leg up. This is not supposed to happen if there is overshoot. After overshoot, we're supposed to get stronger pullback down. So I'm going to zoom back, and I'm going to reevaluate my channel. Since this is not acting as overshoot, can there be a better channel drawn? If I'm going to draw it like this, you can see, yes, this actually explains structure really well. Consistent series of high highs and high lows. Very healthy uptrend, strong uptrend, because EMA keeps rejecting every single time. So this is the best fitting channel. As you can see, you don't have to be perfect, you just have to be close. And with more price action, the picture is easier and easier to understand, and you will tweak your channels so you can trust them even more. So from this point, what do you do as a price action trader? You're still thinking bullish, and you're still not selling, not buying at the top. You wait for the pullback, okay? So let's zoom in and let's just be patient, follow price action. And we don't need any other indicators. We can only trade based on these candles alone. We have only one indicator. That's the supportive 21 bar EMA, because it can help you understand where the pullback may end. Okay, but you still want to respect the price action, still want to see the good signal bar. Now we were thinking about second entry long. We only have first entry long, which is a surprise that there was no two-leg pullback, but it can of course happen. Downtrend is in play. We cannot go long, that's okay. We cannot break the rules. We have to follow the rules. We draw the short-term downtrend. And now we have another second entry long. New high, first entry long, pullback, second entry long. Now when I'm watching this, I'm feeling a little bit uneasy because we have rounding top, push up, push up, push up. It's looking like it's going to roll over and you're at the top of this uptrend. This uptrend was quite long, and this is quite common beginner trap because beginners, they're afraid to be buying when the uptrend is developing. They wait, and they only buy at the top of the move. But this was such a nice signal bar, and you have 2 key entry points. I took it even though I was quite afraid that there is no new low. You know, this is such a good signal bar, 2 key entry points. Trading is about taking a risk. I took this setup myself and I got stopped out, no problem. It is not about overthinking every pattern. You just simply have to follow the rules, and the trade will either work or it won't, and you still follow the price action rules. So decent second entry long, great signal bar. Hopefully it is clear that, you know, the tops are rounding and this uptrend has been working for quite some time, but definitely great signal bar. You know, it was super tempting, 2 key entry points. It could have easily made the scalp, so don't beat yourself up too much over the setup. If you tried it, no problem. Now market is going a little bit sideways, but are we thinking about selling? We're not, because this uptrend still needs to get new high following the trend line rule. This was a strong uptrend. Okay, and by the way, you cannot re-enter here because you're back below EMA. Horrible inside bar, EMA in one of these bars, so just be patient. Wait for push above EMA, which is happening. Okay, big bullish momentum in the market, so I expect new high. What is the setup that I'm expecting? High-low confirmation setup. Can I get a high-low confirmation setup? Yes, I do. I have high-low here, but the signal bar is not that great, so I don't even like marking this more aggressive. You know, it is not a bad setup context-wise, definitely, but the signal bar is sketchy. Can we get something better? The high-low still ended up working because you keep your stop loss 1 tick below the signal bar, so you can see you got out, but you know, I think you need to be patient. And now we have what is called a double high probability setup. New high, first entry long, pullback, second entry long, new low, first entry short, pullback, second entry short, failure. Which once again, the more reasons you have, the better. This is a great tier 1 signal bar. EMA keeps holding. The main uptrend needs to get new high, so this is giving you the confirmation that we're going to go higher. This is how we can predict where the market is heading, and this is absolutely textbook high probability setup, because 2 high probability setups in one, it's not happening so often, but when it does happen, that gives you the extra confidence that you have more reasons to enter. Textbook setup, you need to wait for this bar to get a trigger, then you're going to drop your limit order, place your stop loss 1 tick below the signal bar, or if you really want to make sure you're going to catch it, just place your buy stop order 1 tick above this bar, and you're going to get filled once there's a trigger above this bar. High and market is working higher, and we created the break and the new extreme. So we're definitely not thinking about selling because you need at least the reversal pattern below EMA, but when the uptrend is very strong like the day it is, there can be uptrend continuation, so we'll just be patient. And we are truly trending higher like this. Hold on, why do we keep making high highs after breaking new highs? So the bullish momentum is not over. Market is telling me that the bullish momentum is not over. So what I'm gonna do, I'm not really excited to go long because you're breaking new high, but I'm not thinking about selling. So let's see what's gonna happen. Can we get some nice high low or something? Okay, we keep working higher. Second entry long below EMA, I can't really take it. So, and we keep working really higher, so I'm just gonna be patient here. We have a second entry long, but we broke below EMA in all of these bars, can't really take it. Horrible congestion, 6 bars stacked right next to each other, but because we keep working higher, I'm gonna think about possible bigger pattern, because I have to explain why after breaking new high, we keep working higher, and there is a decent chance I'm gonna connect these swings right here, something like this, that there is a bigger pattern. Because why after breaking new high of the initial channel, we keep working higher. There is a chance there's a wider channel developing. So I'm going to be paying attention. If we can get some pullback to this key entry point, this is the first leg down, break, second leg down. Remember, all earlier trends played out. So you definitely be careful now thinking about buying. You really want to make sure we're going to correct deeper. Okay. We're starting to go sideways here. Now, I don't think we can go long just yet because it is too flat. We cannot stay above EMA, and that's a problem. Because what if there is a bigger downtrend, a little bit wider like this? You don't know. Okay, so I want to see the strong push above EMA to know that this has been confirmed. So far, EMA keeps projecting every single time. So let's just be patient. I don't think we can buy just yet. Okay, it is too congested, and now we're breaking higher. We have congestion here. The trend line keeps holding, and this is interesting. This is what we call high-low breakout pullback. We broke out of this congestion, came back, tested it. 3 key entry points: EMA, resistance that is acting as support, and the trend line. So this right here is a high-low breakout pullback. It is a tier 1 signal bar, and this is a great hyper setup. Once again, correction phase is ending. It's taking time for market to trap all the sellers. Push above EMA is indicating resumption of the bullish bias, and this is the hyper setup. Signal bar is the last confirmation that you can go long. This is a great hyper setup, and now it's getting way too late and market is about to close. So this is how we use price action rules to help us understand where the market is going and where are the high probability setups. Absolutely awesome trading day. It's been a while since we had so many trading opportunities. At first, you're following short-term channels inside the trend range. You're buying low, selling high. Here you can see the structure is not acting as a trend range, because here you can see up and down, up and down, up and down. And here we're only going up. We can't even stay below EMA. So this is how you can see this bottom part is completely empty, which means bullish bias is kicking in, uptrend is established, and then on the way up, you get a lot of opportunities to buy when the correction phase will end and a brand new push phase will begin. And you can see majority of these setups today produce a very significant runner, which means you can scalp majority of your contracts and leave one contract open in case market keeps going higher, and today it really did. So I hope you had a great trading day. I'm going to wrap it up, and I'm going to talk to you next time. Good luck with your trading.